Members, government officials, good morning. This is the first council meeting in the year of the horse. I wish that Hong Kong's economy would thrive and be as robust as a horse, and I wish everyone good health and success in your endeavor. And I also look forward to having a positive relationship with the executive. Let's seize the opportunity of the 15th five-year plan and take forward high-quality developments to benefit the public. Government Bill, first reading. Appropriation Bill 2026, second reading, Financial Secretary. President, honorable members, and fellow citizens, good morning. I move that the Appropriation Bill 2026 be read a second time. Today is the 9th day of the Chinese New Year, and the city is still brimming with festive spirits. The bustling New Year fairs, the buzzing night parade, and the dazzling fireworks display above Victoria Harbour have echoed the vigor and vitality symbolized by the Year of the Horse. Over the past year, as a result of the booming economy and capital markets, our tax revenue has increased. Coupled with the reinforced fiscal consolidation program gradually bearing fruit, our public finances have improved sooner than expected. The operating account has returned to a surplus this financial year. After taking into account the proceeds from bond issuance, the consolidated account has also returned to balance ahead of schedule. All these have enabled us to suitably reinforce support for the people and small and medium enterprises within our means. This year marks the beginning of the National 15th Five-Year Plan. The stable and high-quality developments of our country is always our strongest backing. Our country's sustained high-standard two-way opening up, coupled with scientific and technological innovation, have presented us with new opportunities. We must embrace the 15th Five-Year Plan with an innovative mindset, fostering new quality productive forces in accordance with local conditions. Leveraging our edge of having close connectivity with the mainland and the world, and with a large pool of talents, we will facilitate enterprises in opening up new markets. We expect Hong Kong's economy to sustain good momentum this year. The theme of this budget is driving high-quality, inclusive growth with innovation and finance. I will elaborate on this a little later. Economic situation in 2025. The global political and economic landscape is fraught with complication and volatility. The United States waged a tariff war early last year, precipitating a sharp escalation in global trade tensions. As the U.S. reached preliminary trade agreements with various economies and achieved consensus with China on key economic and trade matters, trade frictions eased, allowing the global economy to continue expanding. Technological transformation and the rapid development of artificial intelligence has spurred a fresh wave of investment enthusiasm and driven products demand. Asia, especially China, serves as an important engine propelling global economic growth. Furthermore, the resumption of interest rate cuts by the U.S. since September last year has bolstered performance of the investment and capital markets. The International Monetary Fund (IMF) projects global economic growth of 3.3% for 2025, which is broadly in line with that of year 2024. Hong Kong's economy was buoyant last year. External trade remained strong, private consumption rebounded, and fixed investment accelerated. The overall economy grew by 3.5% in the year, marking the third consecutive year of expansion. Boosted by robust demand for electronic-related products, total exports of goods from Hong Kong grew by 12% in real terms, with particularly notable increases in exports to the Chinese mainland and the ASEAN. Exports of services rose by 6.3%. Visitor arrivals surged by 12%, while cross-boundary financial services and traffic saw sustained growth. On domestic demand, private consumption expenditure rose by 1.7% for the year, reversing the downward trend from the second quarter of 2025. Amid continuing economic expansion and a recovering residential property market, growth in overall investment expenditure accelerated to 4.3%. The labor market gradually stabilized in the latter half of the year. The seasonally adjusted unemployment rate stood at 3.8% in the fourth quarter. Employment earnings showed sustained growth, with the median monthly employment earnings of full-time employees increasing by 4.2% year-on-year in the fourth quarter. Inflation remained mild. Netting out the effects of the government's one-off measures, the underlying inflation rate was 1.1% last year. The stock market delivered a stellar performance. The Hang Seng Index rose by 28% over the year. The daily turnover surged by 90% to a historic high of close to $250 billion. Capital raised through initial public offerings exceeded 2024 by more than 2 times to over $280 billion, ranking first globally. The residential property market saw increases in both prices and transaction volumes. Market activities have been active since last March, with total transactions reaching a 4-year high of nearly 63,000 for the year. Property prices rose by 3.3% for the year, ending a 3-year decline, while rental prices rose by 4.3% in the year. Transaction volume for non-residential properties rebounded, while the declines in rentals and prices narrowed. Economic outlook for year 2026 and the medium term. Entering year 2026, global trade tensions have moderated, and economic activities continue to expand in major economies. The Chinese mainland will be the leading contributor to global economic growth, serving as the key driver for both regional and global economic momentum. The steadfast development of our country will continue providing firm support for Hong Kong. Our country will implement more proactive macro policies this year, expanding domestic demand and steadfastly advancing high-quality developments, while maintaining reasonable economic growth. Driven by investments in AI and other new technologies, the demand for related products continues to underpin the trade expansion in Asia. Market expectations of further interest rate cuts in the U.S. caused moderate growth for the global economy this year. Benefiting from these factors, Hong Kong's exports of goods should sustain decent growth. Exports of services will also continue to increase, driven by increasing visitor arrivals and demand for financial services. Domestic demand will grow steadily. A stable labor market and rising household incomes will drive private consumption, while improvements in business sentiment, coupled with expectations of interest rate cuts, will boost asset markets and investments. Nevertheless, the international environment remains complex and intricate, with the major advanced economies still frequently shifting their trade and economic policies. Uncertainties will continue to loom over global trade. A slower than expected pace of U.S. rate cuts could hamper the optimism currently underpinning the global financial markets. To expand, inflation this year is expected to be moderately higher than last year. We forecast the underlying inflation rate and the headline inflation rates this year 8% respectively. In the medium term, protectionism will persist in some major economies, while fragmentation of the global economy will continue. Nevertheless, the rise of the global south and the reshaping of the global trade and investment landscape will unlock new markets and new growth areas for Hong Kong. This year marks the beginning of the 15th Five-Year Plan. Hong Kong will proactively align with the 15th Five-Year Plan, better integrate and serve the overall national development, and continue to proactively participate in the development of the Guangdong, Hong Kong, Macau, Greater Bay Area. The current term government is committed to expanding economic, developing new quality productive forces tailored to local circumstances for promoting high-quality economic development. We forecast that Hong Kong's economy will grow on average by 3% per annum in real terms from year 2027 to 2030, with the underlying inflation rate averaging 2% a year. Sustaining momentum and accelerating economic development. Hong Kong's economy has grown for 3 consecutive years, with overall sentiment steadily turning positive. Mega events are drawing visitors to Hong Kong, and international conferences have brought together global political and business leaders, fostering deep exchanges and collaboration. 1. More buoyant asset markets. The stock market has shown the market has turned positive. Total bank deposits exceeded $19 trillion as at the end of last year, increasing 12% year-on-year, with capital continuing to flow in. The asset management sector is also faring well, with net fund inflow of $357 billion. Hong Kong ranked third globally and first in the Asia-Pacific in the Global Financial Centers Index. Hong Kong is expected to become the world's largest cross-boundary wealth management center in 1 to 2 years. 2. Accelerated convergence of enterprises and talents. The Office for Attracting Strategic Enterprises, or the OASIS, has attracted over 100 strategic enterprises to establish in Hong Kong. 51 have been listed and 71 set up their global or regional headquarters in Hong Kong, bringing in about $60 billion of investment and creating around 22,000 jobs. Invest Hong Kong assisted 560 enterprises in establishing traction. Three, strengthening international connections. The establishment of the International Organization for Mediation in Hong Kong has further strengthened our status as the center for international legal and dispute resolution services in the Asia-Pacific region. International conferences and exhibitions such as the Belt and Road Summit, Asian Financial Forum, Hong Kong Fintech Week, Hong Kong Maritime Week, and InnoX each drew thousands of global political, business, and industry leaders. This year, we will sustain our efforts in deepening international connections. For instance, the Asia-Pacific Economic Cooperation Finance Ministers meeting will be held in Hong Kong for the first time. 4. Soaring visitor arrivals drawn by mega events. Visitor arrivals approached 50 million last year, increasing year-on-year by 12%, with non-mainland visitors recording a growth of 15%. Hong Kong boasts an extensive lineup of mega events. The National Games, as well as the National Games for Persons with Disabilities and the National Special Olympic Games, which we co-hosted with Guangdong and Macau last year, enhanced Hong Kong's capability to organize large-scale sports events and deepen integration and collaboration among GBA cities. Less than a year after its commissioning, Kai Tak Sports Park has achieved the highest ticket sales in Asia and ranked third globally for its main stadium, registering the highest gross income of any stadium in Asia. In the coming year, mega cultural and sports events will follow one after another, showcasing our unique glamour. And 5. Accelerating the developments of the Northern Metropolis. Being a new engine for long-term development, the Northern Metropolis will inject fresh economic impetus into Hong Kong and support a new South-North dual engine, finance INT industry pattern. We are accelerating its development through various measures, including adopting a large-scale land disposal approach in land allocation and expediting the bringing in of enterprises and industries, as well as establishing 2 dedicated companies for Santee Technopole and Hung Shui Kiu Industry Park, respectively. We plan to introduce a dedicated legislation for the NM in the middle of this year. Proactively aligning with the 15 5-year plan. The recommendations for formulating the 15 5-year plan delineates the overall approach, strategic goals, and major initiatives for our country's development in the next 5 years. It is a strategic blueprint for setting out the direction of the full implementation of Chinese modernization. The recommendations also give explicit support to Hong Kong in better integrating into and serving the overall national development, consolidating and enhancing our status as an international financial, shipping, and trade center, while developing into an international INT center and an international hub for high-caliber talents. Hong Kong can contribute in various key areas. 1. Contributing to building a modernized industrial system and accelerating high-level scientific and technological self-reliance of our country. With strong basic research capabilities, Hong Kong possesses a unique edge in AI, life and health technology, fintech, as well as new materials and new energy. Being an international financial center, Hong Kong will drive Finance Plus, capitalizing on our financial sector to better serve the real economy and industries with competitive edge, and pressing ahead towards mutual empowerment of finance and INT. In so doing, we can leverage our strengths to serve the country's needs. 2. Proactively participating in our country's developments in promoting high-standard opening up. Hong Kong possesses unique institutional strength under one country, 2 systems. With our efficient aviation, shipping, and logistics services, we serve as a super connector and super value adder to help enterprises go global and bring in external investments, fostering two-way trade and investment. And 3. bringing together high-caliber talents from across the globe. Hong Kong's world-class universities and internationalized environments are conducive to attracting and bringing in top global talents in various sectors, particularly leading experts in the scientific research field from around the world. We will keep nurturing local talents, aligning with the integrated developments of education, technology, and talents of our country. The Chief Executive will lead a cross-bureau, cross-departmental task force for Hong Kong to proactively align with the 15th Five-Year Plan, and, for the first time, to formulate Hong Kong's 5-year plan. We will integrate more actively into and serve the overall national development. With the synergy between a capable government and an efficient market, we aim at driving high-quality, high-value-added and diversified economic growth.
International Innovation and Technology Hub. Technology changes are reshaping the global economic landscape and generating new consumption demand and investments, while fostering the integration of industries across boundaries. Technological innovation is driving industrial innovation profoundly. Hong Kong's strengths in innovative scientific research and commercialization of research outcomes lie in our internationalized qualities, strong research capabilities, support of financial sector, and a rich pool of high-caliber talent. We're stepping up support measures such as computing power, land and capital, together with GBA City's well-developed advanced manufacturing to enhance our influence as a global source of original innovation. Artificial Intelligence Plus. We're pressing ahead with the industrialization of AI and deepening its integration across various industries while encouraging wider AI application, thereby achieving the target of adoption and utilization by all. Committee on AI Plus and Industry Development Strategy. The application of AI technologies is swiftly driving the process of industrial transformation. New technologies, new industries, and new products are quickly emerging. I will set up and chair the Committee on AI Plus and Industry Development Strategy to formulate strategies and create favorable conditions for AI to empower the transformation and development of industries. The committee will comprise experts, academics, enterprises, and industry park companies with an initial focus on life and health technology and embodied AI. Empower industries through AI. In respect of basic research and development, the Inno Hong Kong Research Cluster has so far funded 16 laboratories specializing in AI and robotics technologies. Their research focuses on technologies like AI-driven robotics, which could widely apply to industries such as healthcare, logistics, smart manufacturing, and construction. The $3 billion AI subsidy scheme launched by the government has approved around 30 R&D applications in the fields of large language models, new materials and biomedicine, etc., to enhance local AI research standards and application. We are making proactive efforts to align with the National AI Plus initiative by promoting industries for AI and AI for industries through application. The Hong Kong AI Research and Development Institute Company Limited will come into operation in the second half of this year. The company aims to promote AI plus development and transformation of R&D outcomes. It will also advise on matters such as the governance framework and regulatory regime for AI development. The Hong Kong Monetary Authority and Cyberport have recently started trials for the second cohort of sandboxes, focusing on AI versus AI strategies for promoting secure and responsible AI application in the banking sector. Computing infrastructure. Hong Kong's overall computing power has now reached 5,000 petaflops, laying an important foundation for supporting AI development. The data facility cluster at Sandy Ridge, which can provide a gross floor area of 250,000 square meters, will further enhance Hong Kong's overall computing power. The tender result of the site will be announced shortly. The cluster will render crucial support for data and computing power required by the use of AI. AI training for all. AI brings new opportunities to society and the job market. The key is to popularize the understanding and use of AI by all levels of society. We will invite public organizations to organize, in collaboration with technology enterprises and tertiary institutions, AI application courses, seminars, and competitions targeting students, young people, and members of the public for enhancing their AI awareness and application skills and to be responsible AI users. We will set aside $50 million to take forward this initiative. In the 2025-26 to 2027-28 triennium, the UGC-funded universities will introduce a total of 27 undergraduate programs related to STEAM, including AI, creative industries, data science, and so on. As regards self-financing post-secondary institutions, AI-related programs will be prioritized for inclusion in the study subsidy scheme for designated professions or sectors starting from 2027-28 academic year. Meanwhile, the Vocational Training Council, that is VTC, also includes AI application in the compulsory modules on information technology for all of its higher diploma programs. The Employees Retraining Board will be upgraded as Upskill Hong Kong, providing various types of skill-based training courses, including AI application, thereby enhancing the competitiveness of the local workforce. The Quality Education Fund has earmarked $2 billion to take forward digital education in primary and secondary schools by offering school-based AI education programs and subsidizing students to participate in related activities. We also provide AI training for teachers. Data utilization. To further enhance the utilization of data within the government, we will allocate additional resources to the Census and Statistics Department to expand its consulting and analysis services on data science for bureaus and departments in order to identify pain points in operations and propose corresponding solutions. The CNSD will also launch a new online platform for interactive data dissemination service next month. Through integrating different types of statistical data, this platform enables enterprises and the public to conduct cross-subject analysis. A natural language data query feature will be introduced into the platform in the third quarter. Empower public services through AI. Various departments are proactively leveraging AI and related technologies to promote digital intelligence for enhancing the standard of public services. For instance, traffic management. The Transport Department will explore the setting up of a traffic management platform integrating the use of big data analytics and AI, allowing comprehensive monitoring of real-time traffic conditions and enhancing management efficiency. Employment services. To provide better services for job seekers and employers, the Labor Department will optimize job matching with AI. Flood alert. The Drainage Services Department will enhance its smart flood forecast and alert system. Besides, the DSD has developed an AI large vision language model to analyze the images captured by street cameras, thereby speeding up emergency response. And finally, landslide risk assessment. To enhance the landslide warning system, the Civil Engineering and Development Department will consolidate Hong Kong's rainfall data, landslide records, and man-made slope data this year for conducting real-time and dynamic landslide risk assessment. The government has set up the AI Efficacy Enhancement Team to coordinate and steer government departments to apply AI, conduct process re-engineering, and enhance efficiency. We will allocate $100 million for introducing leading technologies from the industry to accelerate digital intelligence transformation of the government. The Civil Service College will work with the Digital Policy Office DPO to provide AI training for civil servants to better grasp the relevant knowledge. Life and health. We are actively advancing the integrated development of life and health technology at upstream, midstream, and downstream levels. On upstream R&D, we will pursue its development through a 1+3 model involving the headquarters of Life and Health Technology Research Institutes to be set up in the Hong Kong Park of the Hetao Cooperation Zone, that is Hetao Hong Kong Park for short, and 3 branches to be set up by universities. In addition, we have set up various R&D centers under the Inno Hong Kong Research Clusters. On midstream outcome transformation, the research, academic, and industry sectors 1+ scheme, that is RACE Plus, has supported a total of 15 projects. As for downstream industries, 3 major I&T parks together host nearly 500 relevant enterprises and organizations, creating a vibrant ecosystem. International Health and Medical Innovation Hub, R&D and Transformation of Biomedicine Technology. The GBA International Clinical Trial Institute, situated in the Hetao Hong Kong Park, has launched a collaboration platform with the Shenzhen Park. It provides a one-stop clinical trial support platform that brings together researchers and integrates databases for promoting R&D of biomedicine and vaccines. The International Clinical Trial Academy will be established next year, which will help the mainland's biomedicine technology to go global and attract foreign investments, thereby helping to develop Hong Kong into an international health and medical innovation hub. Cross-boundary medical collaboration. The government established the Real World Study and Application Center at the end of last year to support pharmaceutical companies and expedite the launch of innovative drugs and medical devices on the mainland and international markets, contributing to the mainland's drug regulatory science system. Development of Chinese medicine. The Chinese Medicine Development Blueprint outlines the vision for Chinese medicine development in Hong Kong with the aim of promoting comprehensive, high-quality, and high-standard development of Chinese medicine. We will inject $500 million into the Chinese Medicine Development Fund for undertaking research, training, and international publicity on strategic themes. The Chinese Medicine Hospital of Hong Kong and the Government Chinese Medicine Testing Institute have started services. The new facilities will help spur the development of CM services, scientific research and innovation and standard setting for showcasing the edge of CM to the world. Development of new industrialization. We actively steer local manufacturers towards smart manufacturing, leveraging technologies such as Internet of Things, real-time data, application of data analytics, advanced human-machine interfaces, and robotics. The new industrialization funding scheme has supported over 120 new smart production lines, drawing in private investments of over $1 billion. Moreover, the new industrialization acceleration scheme aims to encourage enterprises to establish high-end smart production facilities in Hong Kong. 4 projects have been supported so far, involving a total investment of about $2.5 billion, of which more than 70% is private investment. The government will launch the new Industrialization Elite Enterprises Nurturing Scheme this year, supporting targeted high-growth enterprises, contributing to the development of new industrialization with the aim of nurturing emerging and future industry enterprises in Hong Kong. The government is committed to implementing the cooperation agreement on the development of new quality productive forces and the promotion of new industrialization signed with the Ministry of Industry and Information Technology to promote industrial collaboration. We will set aside about $220 million for establishing in Hong Kong the first national manufacturing innovation center outside the mainland. The pilot lines for R&D and trial production of third-generation semiconductors of the Hong Kong Microelectronics R&D Institute will start operation this year to facilitate local semiconductors R&D and upgrading of industries. The new industrialization acceleration scheme has also supported 2 enterprises developing semiconductor chip technology and equipment with total investments of over $1.5 billion. We are conducting a study on the medium to long-term development of new industrialization in Hong Kong, including emerging and future industries. We aim to accelerate new industrialization and the development of new quality productive forces in the city, enabling us to integrate into our country's overall planning of new industrialization and inject new impetus into the economy.
發展
We will promote the full integration between technological innovation and industrial innovation through key infrastructures, including the Hotel Hong Kong Park and Shantin Technopole. Public-private partnerships. One of the keys to realizing the vision of building the NM into a new international I&T city is to release the potential of the underdeveloped private land therein and convert them to industrial space and ancillary facilities, thereby providing staunch support for accelerated development of the real economy and industries. We are exploring ways of further encouraging developers owning land in the NM to collaborate with technology or advanced manufacturing enterprises in submitting joint development proposals to the government. We expect that through tripartite collaboration, relevant land and corporate resources will be channeled towards the target industries for priority developments in Hong Kong. In doing so, the business sector will have greater participation in the I&T transformation of our economy, thereby expediting the NM development through concerted efforts. Hotel Hong Kong Park. Over 60 enterprises have moved into the first 2 buildings in Phase 1 developments of the Hotel Hong Kong Park, taking up around 80% of floor area. Meanwhile, the planning for Phase 2 development has been completed. The 2 phases together will provide a total floor area of 2 million square meters. We will seek approval from the Legislative Council to inject a funding of $10 billion to the park company to accelerate the developments of the Hotel Hong Kong Park by engaging the market to speed up the disposal of the remaining land parcels under Phase 1 development, providing key infrastructure, further strengthening support to startups and establishing a venture fund. We are seeking to facilitate the convenient flow of personnel, materials, capital, and data between the Shenzhen Park and Hong Kong Park. We are also exploring with the mainland and the formulation of specific implementation plans to allow cross-boundary flow of research data and biosamples, such as whitelist and green lane mechanisms to streamline entry-exit procedures and approval processes. Santine Technopole. Santine Technopole is an extension of the loop. Together with the Hotel Hong Kong Park, there will be a coordinated development at upstream, midstream, and downstream levels, creating a comprehensive industrial ecosystem. While the loop focuses on R&D, commercialization, and pilot production in the upstream and midstream levels, the Santine Technopole will provide a large piece of land which can help accelerate the commercialization of R&D results and provide industrial space for prototyping, pilots, and mass production. We will establish a dedicated company this year and seek approval from the LegCo to inject $10 billion as initial capital to take forward the development, while leveraging market resources to accelerate the progress. Nurturing and strengthening emerging industries. Low-altitude economy. LAE is a new engine for smart city development and regional integration. The government has completed the first-stage legislative amendment exercise and will refine the legislation and regulatory framework on civil aviation to lay the foundation for the development of LAE standardization in the long run, building a competitive LAE ecosystem. Under the first cohort of the regulatory sandbox, 32 projects have conducted trials along their designated routes. Some application scenarios of unmanned aircraft, such as building management and inspection, have already been implemented. Trial projects such as unmanned aircraft system, traffic management system, multiple applications, users, shared platforms, cross-boundary routes, and passenger-carrying flying aircraft will be rolled out in phases from the first half of this year. We are also actively exploring with the mainland to commence trial flights on cross-boundary low-altitude logistics. Aerospace. The recommendation sets out the goal to expedite the development into an aerospace power. The China National Space Administration also proposes facilitating commercial aerospace enterprises to go global in an orderly manner. Hong Kong can help connect the mainland aerospace industry with the global market and provide professional services in areas such as R&D, financing, risk management, and law. OASIS will take the lead to identify aerospace enterprises to develop in Hong Kong. We have already requested the Hong Kong Exchanges and Clearing Limited (HKEX) to review the relevant listing requirements so as to facilitate and attract the listing of aerospace enterprises in Hong Kong. The Hong Kong Space Robotics and Energy Center, established under Indo-Hong Kong, takes part in our country's Chang'e 8 mission. Its multifunctional lunar surface operation robot has entered the spacecraft prototype testing phase, and there would be ground application of such technology. In addition, the Innovation and Technology Fund has allocated over $100 million to support 6 R&D projects from universities. Recently, the CUHK SAT-1 satellite, developed by the Chinese University of Hong Kong and supported by the IDF, was successfully launched and entered into the planned orbit. Low Earth orbit satellites can support the development of high-end industries. We will proactively expand telecommunications infrastructure, streamline the relevant licensing regime, and promote future 6G applications. Autonomous driving. On the premise of ensuring road safety, the government is accelerating the development of autonomous driving into driverless mode and scaling up its operations, with a view to expediting its transition to commercial operations and encouraging the industry to leverage Hong Kong as a platform to tap into overseas markets. The Airport City Link autonomous transport system, scheduled for operation this year, will become the first commercially operated project in Hong Kong. New materials. The R&D of new materials in Hong Kong is progressing towards commercialization with potential of international ventures. In particular, 2 local startups will set up production lines at Eco Park, Tuen Mun in the middle of this year to upcycle local recyclables into core materials for electricity-free cooling products and acoustic metamaterial products respectively. Meanwhile, the government is expediting the development of the 3rd Indo-Hong Kong Research Cluster, focusing on new materials and advanced manufacturing, energy, and sustainable development. R&D centers under this cluster will be established in phases in the first half of this year. Risk 5. RISC-V is the underlying technology of a new generation of chips. Its open-source nature has overcome the limitations of the closed nature of traditional technology, thereby spearheading a transformative wave of change in chip design and application on a global scale. The Hong Kong Investment Corporation, or Hong Kong IC, has been actively promoting R&D and industrialization of the RISC-V technology through strategic investments and collaboration with leading enterprises. Initiatives include the establishment of the Hong Kong RISC-V Alliance, which aims at bringing together industries, academia, and the investment sector for cross-industry cooperation in the GBA and international collaboration. Embodied AI. The development of AI has transitioned from large language models towards embodied intelligence capable of interacting with the physical world. The technology and application of different carriers, for instance, robotics, will continue to evolve. This will bring fundamental changes to manufacturing processes, business operation, and our daily lives. Various INT parks and HAIC also provide support to embodied AI startups. The government will actively promote the development of an ecosystem for embodied AI and application of related products. Quantum technology. Quantum technology can propel an exponential leap in computing power, communication security, and sensing accuracy. Such technological breakthroughs will lead to more innovative applications. A number of studies are being conducted by the tertiary institutions on various areas, such as developing the AI-based quantum simulation platform and advancing the convergence of AI and quantum computing through various platforms, including in Hong Kong. 2 state key laboratories relevant to quantum technology have also been established in Hong Kong. The government will actively promote the relevant basic research and industry application. Innovation and Technology Industry-Oriented Fund. The government introduced the $10 billion Innovation and Technology Industry-Oriented Fund to channel markets capital to invest in emerging fields of strategic importance, such as life and health technology, AI and robotics, as well as future industries. The selection of fund managers is underway. We aim at commencing the operation of the fund within this year. Enhance collaboration among the industry, academic, and research sectors. The $10 billion Raise Plus scheme funds research teams from universities on a matching basis to transform and commercialize R&D outcomes. A total of 49 projects were approved, covering fields such as health and medical sciences, new materials and new energy, AI, and advanced manufacturing. Relevant products will be launched in the market. Review tax arrangements for R&D expenditures. Close economic integration of Hong Kong with the GBA brings about opportunities for cross-boundary scientific collaboration, technology transfer, and the development of emerging and future industries. The government will review and enhance tax arrangements for R&D expenditures. Patient capital. Hong Kong IC. In addition to seeking medium to long-term investment returns for our fiscal reserves, the Hong Kong IC aims to bring in more frontier technology enterprises and patient capital to Hong Kong, as well as promote in-depth collaboration among the government, industry, academia, research institutes, and investors. It also aims to accelerate the establishment of Hong Kong's INT ecosystem and the development of strategic industry chains. All these will enhance our competitiveness and contribute to the diversified development of our economy. Since its full operation, the Hong Kong IC has invested in over 190 projects spanning various fields, which mainly include hard and core technology, life technology, new energy, and green technology. 10 of the investee companies are already listed in Hong Kong, with a further 20 preparing for listing this year. Every dollar invested by the Hong Kong IC attracted over $8 of long-term capital investment, effectively drawing patient capital from the global markets to jointly expedite the development and innovative application of frontier technologies. Considering that the initial capital of the Hong Kong IC of $62 billion has been largely allocated, we will arrange for capital injection in a timely manner to further promote INT development and industry clustering.
International Financial Center. The global political and economic landscape is undergoing profound transformations. Despite the complex and ever-changing external environment, Hong Kong's financial market has performed strongly and our financial system remains robust. We'll continue to consolidate our existing strengths, tap into emerging fields, strengthen market systems and risk control, and deepen financial cooperation in the GBA. By doing so, we will enhance Hong Kong's role as an international financial center on all fronts and contribute to the national strategic goal of accelerating China's development as a financial powerhouse. We will also leverage our strengths in finance to drive industry development that is finance plus. Consolidating existing strengths. Advance internationalization of renminbi. The recommendations have called for advancing the internationalization of renminbi and pursuing greater openness of renminbi capital accounts. We would leverage Hong Kong's unique strengths and proactively align with national development strategies. Specific measures include 1. Doubling the size of the renminbi business facility to renminbi $200 billion earlier this month to support financial institutions in facilitating the wider use of renminbi by enterprises and customers in activities such as trade and cross-boundary business. 2. Promoting more convenient foreign exchange quotations and transactions between renminbi and other regional currencies to reduce transaction costs. 3. Issuing renminbi bonds of different tenors on a regular basis to enrich product offerings in the offshore renminbi market and improve the offshore renminbi bond yield curve. 4. Exploring with the industry the formation of the offshore renminbi yield curve and looking into specific measures to improve price discovery in the short to medium-term interest rate market. And 5. Attracting high-quality issuers to increase renminbi bond issuances in Hong Kong and tapping into emerging markets to bring more cross-boundary renminbi transactions to Hong Kong. In order to enrich mutual market access, we will actively explore with the mainland the acceleration of the issuance of mainland government bond futures in Hong Kong, the inclusion of real estate investment trusts, that is REIT, under mutual access, and the inclusion of a renminbi trading counter under the southbound trading of the Stock Connect. We will explore further enhancements to the Bond Connect. Securities market. Since the implementation of severe weather trading arrangements by the Hong Kong Ex in September 2024, the stock market has operated in inclement weather for 7 trading days. The trading maintained market liquidity while generating stamp duty revenue of about $2.5 billion. To continue enhancing the securities market, attracting issuers, and boosting market efficiency, the Hong Kong Ex will take forward the following measures. 1. Consulting the market in the first quarter on the revision of listing requirements for enterprises with weighted voting right structures, facilitation of the secondary listing of overseas issuers, enhancement of the IPO process, and provision of greater flexibility for biotechnology and specialist technology companies applying for listing, and so on. 2. Implementing the enhanced structured product listing framework and putting forward specific implementation proposals for the settlement cycle of T+1 for market consultation in the first half of this year. And 3. Taking forward board lot reforms in the securities market and launching the uncertificated securities market regime in collaboration with the SFC and the industry this year. We will also introduce the next stage of reforms, including enhancing the regulatory regime for listed companies, providing specific guidelines for overseas companies seeking secondary listing in Hong Kong, offering more overseas market as recognized exchanges, and continue to explore with the market the provision of an over-the-counter trading platform for the listed stocks or those requiring special handling. Bond market. The SFC and the Hong Kong MA are actively implementing the roadmap for the development of fixed income and currency markets announced last year. It includes boosting issuance in the primary market, enhancing liquidity in the secondary market, and expanding offshore renminbi business. The electronic bond trading platform will also be launched in the second half of this year, thereby reinforcing Hong Kong's position as a global fixed income and currency hub. To promote innovation in the bond market, the government issued the third batch of tokenized bonds with an issuance size of $10 billion in the fourth quarter last year. It marked the largest tokenized bond issuance in the world at the time. The option to settle via tokenized central bank money also laid the foundation for future integration with other forms of digital money. We will continue issuing tokenized bonds on a regular basis. The Hong Kong MA will also encourage more digital bond issuances in Hong Kong through the Digital Bond Grant Scheme. Asset and Wealth Management Center. The number of single-family offices in Hong Kong exceeds 3,300. To attract more family offices and funds to set up in Hong Kong, we will enhance our tax regime, including expanding the scope of fund to cover specific funds of one, as well as classifying digital assets, precious metals, specified commodities, and so on, as qualifying investments eligible for tax concessions. We will introduce an amendment bill in the first half of this year in order to effect the implementation from the year of assessment 2025-26. The government and the SFC will continue to promote the development of the REIT market. In addition to seeking early inclusion of REITs under mutual market access, we will introduce an amendment bill this year to enable the privatization or restructuring of REITs. We will also provide a stamp duty waiver for the transfer of non-residential properties into REITs seeking to list. The relevant amendment bill will be introduced in the first half of next year. The integrated fund platform under the Hong Kong X will expand its services this year, covering fund sales, procedures such as payment and settlement to enhance market efficiency and lower transaction costs. Exploring emerging sectors. Corporate treasury centers. We are determined to strengthen the role of Hong Kong as a key base for the establishment of corporate treasury centers and boost the city's appeal as a platform for bringing in and going global. To this end, we will announce a series of enhancement measures in the middle of this year, including providing additional tax incentives and flexibility to CTCs and their associated companies and introducing a pre-approval mechanism. Attracting enterprises to redomicile to Hong Kong. Since the commencement of the company redomiciliation regime last year, the company's registry has approved a total of 22 redomiciliation applications, while about 20 applications are being processed. We will step up publicity to attract more enterprises to set up in Hong Kong. Facilitating asset management by enterprises. To enhance the business environment and facilitate internal restructuring by enterprises, we propose to relax the criteria for stamp duty relief in relation to the intra-group transfer of assets. This would expand the scope of eligible associated body corporates. We will introduce an amendment bill this year, and a new arrangement will apply retrospectively to instruments signed from today. Developing fintech and financial infrastructure. Development of digital assets. The government published the second policy statement on digital assets for developing Hong Kong into a global hub for digital asset innovation through the establishment of a comprehensive regulatory framework. We will introduce a bill this year to establish licensing regimes for, among others, digital asset dealing and custodian service providers. Hong Kong has implemented the licensing regime for issuers of fiat reference stablecoins. The first batch of licenses will be issued next month. The government and financial regulators will continue to facilitate license issuers in Hong Kong to explore different application scenarios in a compliant and risk-controlled manner. On the premise that sufficient investor protection is in place, the SFC will further enhance the liquidity of Hong Kong's digital asset market and facilitate the offering of more products and services to professional investors. The SFC will also set up an accelerator to expedite market innovation. To support the application of tokenization technology in bond issuance and transactions, the government will provide guidelines to clarify that registers of debenture holders can be kept in the form of a distributed ledger. We will also explore the adoption of electronic signature for bond issuance documents and the digitalization of bearer bonds. Crypto asset reporting framework. We will amend the Inland Revenue Ordinance for implementing the crypto asset reporting framework as well as the amended Common Reporting Standard by the Organization for Economic Cooperation and Development, that is OECD for short, in the coming 2 years. This will contribute to international efforts in enhancing tax transparency and combating cross-border tax evasion. We will introduce an amendment bill in the first half of this year. Project Ensemble. The Hong Kong MA launched the Ensemble trial project, that is Ensemble TX. The pilot phase of Project Ensemble last November to enable industry participants to make real value transactions involving tokenized deposits and digital assets within a controlled pilot environment. The Hong Kong MA will continually upgrade the system to support settlement on a 24/7 basis and develop local standards to strengthen Hong Kong's interoperability with other markets. Commercial data interchange. Last year, the Hong Kong MA launched Project Cargo X under the Commercial Data Interchange to enhance the digital ecosystem for trade finance by harnessing the power of cargo and trade data. The government is actively following up on the recommendations of the expert panel on Cargo X in order to promote Hong Kong as a leading trade financing center and supply chain hub. Building the international gold trading market. Following the signing of a cooperation agreement with the Shanghai Gold Exchange earlier this year and the establishment of a Hong Kong's central clearing system for gold, we will 1. Explore offering tax incentive for eligible institutions conducting gold trading and settlement in Hong Kong. 2. Assisting the industry in setting up an industry-led trade association to consolidate resources, step up promotion, and foster ties with industry stakeholders from around the world. And 3. Help the industry keep abreast of the latest gold market developments, acquire relevant skills, and develop a training framework. Strengthening market systems and risk control. Strengthening market systems. One-stop multi-asset class post-trade securities infrastructure. The Hong Kong MA's CMU OmniClear Holdings Limited, CMU OmniClear, and the Hong Kong X will soon start a study on the establishment of a one-stop multi-asset class post-trade securities infrastructure to cover mainland and Hong Kong equity and debt securities. This will facilitate cross-product and cross-boundary collateral connectivity, enhancing market liquidity and risk management. Enhancing the international network of the CMU, that is, Central Money Markets Units. To facilitate investors' holdings of securities through the CMU for achieving global asset allocation, the CMU OmniClear is actively seeking to establish linkages with central securities depositories of various regions. The Central Bank of the United Arab Emirates has become a CMU member. The CMU will activate linkages with SIX of Switzerland and launch equity post-trade services for the first time, enabling investors to manage their diversified asset portfolios more efficiently. Digital asset platform. To promote the application of fintech and enhance the efficiency of the asset management market, the CMU OmniClear will set up a digital asset platform this year. It will support the issuance and settlement of digital bonds. The platform will also be gradually extended to other digital assets and linked with other tokenization platforms in the region, consolidating Hong Kong's leading role in the realm of digital assets. Non-traditional risk management. We are committed to developing the non-traditional risk management business, and we have extended the pilot insurance-linked securities grant scheme to 2028. Meanwhile, the Insurance Authority, that is IA for short, will continue to step up its promotion efforts in markets from around the world. Last year, 2 captive insurance companies were set up in Hong Kong. Financial inclusiveness. The Mandatory Provident Fund Schemes Authority, MPFA, is gradually taking forward MPF full portability. Its Phase 1 proposal, to be implemented this year, covers employees whose employment started on or after the 1st of May 2025. We will introduce an amendment bill in the first half of next year to extend the coverage to employees whose employment started before the above date, and enhancing the regulatory regime. To better protect employees' MPF benefits, the MPFA proposes to enhance the process of recovering default contributions from employers. It will also enhance the flexibility for trustees and relevant service providers in making MPF investments. Upon completion of the MPFA's stakeholder consultation this year, the government will introduce an amendment bill. The IA will enhance the risk-based capital regime for insurance companies, adjusting risk parameters for the general insurance business and providing capital relief for infrastructure investments. Moreover, We will require the industry to adopt a standardized checklist for the disclosure of capital adequacy and risk profile, facilitating public understanding of insurers' governance, finance, and risk management. To strengthen the regulation of moneylenders, the government will release the consultation outcome and specific measures next month to address the issue of excessive borrowing and better protect the public. Strengthening international financial cooperation. The Asian Infrastructure Investment Bank, that is AIIB, announced at the end of last year its plan to set up an office in Hong Kong. The government is proactively facilitating and providing the necessary support. We will hold for the first time the Asia-Pacific Economic Cooperation Finance Ministers meeting this year. We will continue to host various financial mega events, including the Global Financial Leaders Investment Summit, the Wealth for Good in Hong Kong Summit, and the Hong Kong Fintech Week Cross Start Me Up Hong Kong Festival. The Asian Financial Forum will celebrate its 20th anniversary next year, and we will strengthen the element of finance empowering business, that is Finance Plus, at the forum.
Enhancing industries with competitive edge. The recommendations, apart from further reinforcing Hong Kong's strategic position, support us to consolidate and enhance industries with competitive edge. International Trade Center. Facing a complicated and ever-changing geopolitical and economic landscape, we will consolidate and enhance our status as an international trade center on all fronts through a series of policy initiatives. Expand commercial and trade network. Hong Kong will strengthen its role as the functional node for the Belt and Road Initiative. We will collaborate with industry players to further develop the ASEAN and Middle East markets and explore the potential of Central Asia, South Asia, and North Africa markets. Meanwhile, we will forge more free trade agreements and investment agreements. We have concluded negotiation of investment agreements with Qatar, Bangladesh, and Peru, respectively, and are exploring the signing of new IAs with Saudi Arabia and Egypt. Hong Kong has so far signed a total of 55 Comprehensive Avoidance of Double Taxation Agreements, or CTTA, including those signed with Jordan, Maldives, Norway, and Rwanda last year. We will further expand our CTTA network. We will continue reaching out to relevant authorities in BNR regions to seek more projects matching opportunities for Hong Kong enterprises and professional services, while encouraging and assisting external organizations to stage roadshows in Hong Kong. Outbound missions and project matching activities will also be organized to promote our professional services. Attract enterprises and investment. To further attract enterprises to set up in Hong Kong, last year's policy address announced that we would formulate preferential policy packages to promote industries and investment. We have formulated a preliminary framework which would take into account a series of factors, including the enterprise's industry and its technology level, as well as the potential economic contributions and employment opportunities it can bring to Hong Kong. The tools include land grant arrangements, financial subsidies, and tax incentives. The preferential tax rates will be half rates of 5%. We will introduce an amendment bill this year. Tax policy is a key component to economic competitiveness. In view of the evolving global tax environments in recent years, I will establish and chair an advisory committee on tax policy to gather views widely from commercial, industrial, and professional sectors so that Hong Kong's tax policy can reinforce economic development. Support mainland enterprises in going global. As our country is advancing with high-level two-way opening up, more mainland enterprises are actively expanding overseas markets. The Task Force on Supporting Mainland Enterprises in Going Global, or Go Global Task Force, will organize promotional activities to attract mainland enterprises to venture into global markets through Hong Kong. We will also set up a cross-sectoral professional services platform, bringing together Hong Kong's professional services providers in the field of legal services, accounting, financial services, testing and certification, marketing, etc., to support enterprises going global. Support local enterprises. The growing popularity of online shopping and changing consumption patterns have posed challenges to some sectors. The government is enhancing various measures to strengthen the competitiveness of SMEs. The dedicated fund on branding, upgrading, and domestic sales, or BUD fund, has been well received by enterprises. The government will inject $200 million into the fund, raise the funding ceiling of Easy BUD to $150,000 per application, and provide more targeted funding support for enterprises in AI application. The Hong Kong Export Credit Insurance Corporation will introduce a pilot scheme this year to provide protection for SMEs engaging in exports with higher risk buyers. The government will continue providing loan guarantees to enterprises through the SME Financing Guarantee Scheme. We have extended the application period for the 80% guarantee products to the end of March 2028 and also extended the application period for the principal moratorium arrangement to mid-November this year. The total loan guarantee commitments under this scheme will increase by $20 billion. Hong Kong's food industry can leverage its reputation for quality to further expand into the mainland and international markets. We will continue seeking market access and simplified customs arrangements of the mainland for a wider range of local food products. The Center for Food Safety will waive the fees related to the certification of food products for 2 years. Besides, we will introduce a new unified brand for local agricultural and fisheries products in the middle of this year, supported by a certification, testing, and traceability mechanism. Convention and exhibition industry. To promote further development of the exhibition industry and brand building as an international convention exhibition hub, the government will earmark $100 million for attracting large-scale international exhibitions with new elements to Hong Kong through collaborating with relevant organizations on a pilot basis. Our objective is to develop Hong Kong into the first-choice platform for showcasing mainland and international brands while attracting high-spending business visitors to Hong Kong and driving high-value-added economic activities. International Aviation Hub. The Hong Kong International Airport is the world's busiest cargo airport. Its cargo throughput exceeded 5 million tons last year, and its passenger throughput reached 61 million, marking a year-on-year increase of nearly 15%. We will strive to enter into new air services agreements and expand traffic rights with regions demonstrating development potential, such as the Middle East, Central Asia, Africa, and South America, so as to further enhance our competitiveness as an international aviation hub. The new passenger departure facilities at Terminal 2 of the Hong Kong IA are scheduled to commence operations in May, which will substantially enhance the airport's overall capacity. Airport City. The Airports Authority Hong Kong, or AAHK, is proactively attracting businesses and investments to develop Airport City, Skytopia, into a world-class landmark. Relevant developments include the Asia World Expo Phase 2, art storage facilities, and the yacht base. Aircraft Parts Processing and Trading Center. The AAHK is pressing ahead with a leading overseas aircraft services company to provide professional services such as aircraft dismantling and parts recycling in Hong Kong, thereby developing Hong Kong into the first aircraft parts processing and trading center in Asia. Cooperation in transport and logistics. Collaborates with airports in the GBA. Since the launch of the direct passenger service from Zhuhai to Hong Kong for passengers taking flights at Hong Kong IA, over 100,000 passenger trips have been made. The AA will step up promotion while enhancing the connectivity between Zhuhai Airport and the Hong Kong International Airport to encourage more travelers using the service. Sea Air Intermodal Cargo Transshipment Mode. The mode operated by the Airports Authority in collaboration with Dongguan has attracted the participation of 27 airlines and 140 logistics companies. In addition, the construction of the intermodal pier under Phase 1 of the Hong Kong IA Dongguan Logistics Park has been completed. The remaining works are expected to complete within the year, targeted for commissioning in the first half of next year. International Maritime Center. Hong Kong will further align with the national maritime strategic developments and elevate our status as an international maritime center. Meanwhile, we are striving to promote smart logistics and digital transformation in the industry while expanding our cargo hinterland to secure more transshipment cargo. Smart Ports. The newly launched Port Community System provides real-time tracking of sea, land, and air cargo, fostering free flow of information among different industries. In addition, the PCS and Guangdong e-ports are connected to provide value-added services such as one data, multiple declarations. More than 3,000 companies have registered with the PCS. We will continue leveraging the data provided by the PCS to bring greater values to the industry. High value-added maritime services. We will introduce an amendments bill in the first half of this year to enhance tax concession measures for the maritime service industry and provide a half-rate tax concession to eligible commodities traders. All these will further promote the development of high value-added maritime services in Hong Kong. To consolidate Hong Kong's premier position in ship registration, we will introduce an amendment bill this year to revamp the existing ship registration arrangements, including permitting dual registration arrangements to cater for the diverse operating models of international maritime enterprises. Hong Kong Maritime Week. This year marks the 10th anniversary of the Hong Kong Maritime Week. We will organize more large-scale forums and seminars in collaboration with different international maritime organizations, with a view to enhancing Hong Kong's influence as an international maritime center. Green shipping. Develop a green maritime fuel bunkering center. To develop Hong Kong into a green maritime fuel bunkering and trading center, the government will provide port use concessions for vessels powered by green fuel, as well as those carrying green fuels to attract more vessels to bunker green fuel in Hong Kong. An incentive scheme will also be launched for green vessels registered in Hong Kong to encourage green transformation of Hong Kong fleets. All these involve government subsidies of around $34 million. The government will take forward a legislative amendment exercise this year to provide more anchorages for green maritime fuel bunkering operations. Synergy of financial and maritime services. The international maritime industry is undergoing green transformation. Substantial capital investments are needed for building new green vessels or retrofitting existing ones. We will leverage our strengths to promote the co-development of financial and maritime centers. Open up new cargo sources. We are fully committed to establishing a comprehensive rail, sea, land, river intermodal transport system connecting the inland region, striving to channel more inland cargo for exports through Hong Kong. The relevant legislation will be amended within this year to extend the current arrangements under the Air Transshipment Cargo Exemption Scheme to other sea transshipment and sea-air transshipment modes. Smart logistics. To develop Hong Kong into an international smart logistics hub, the government will launch the Future Innovative Logistics Acceleration Scheme this year to drive the transformation of the industry and enhance the interconnectivity of logistics data with a view to increasing the competitiveness of the logistics industry. Modern Logistics Cluster. The Hung Shui Kiu Ha Chun New Development Area is connected with the Qianhai Cooperation Zone and will become the center for modern services in the NM. The government has reserved about 32 hectares of land for developing a modern logistics cluster and will invite expressions of interest from the industry for the development of the first site this year.
International Legal and Dispute Resolution Services Center, International Legal Hub. The Department of Justice (DOJ) is preparing for the development of the Hong Kong International Legal Service Building as a new landmark of International Legal Hub, which will be home to the headquarters of the Hong Kong International Legal Talents Training Academy and International Legal and Dispute Resolution Services institutions and so on. The preparatory works will commence this year. The DOJ will continue to attract international legal and dispute resolution services institutions to establish offices in Hong Kong. Amongst them, the International Institute for the Unification of Private Law, that is UNIDRA, will establish its Asia-Pacific Liaison Office in Hong Kong this year, strengthening the promotion of mediation and arbitration services. The government will strengthen the regulatory framework for accreditation and disciplinary matters of the mediation profession in Hong Kong and will take forward the legislative exercise this year, developing a sports dispute resolution system. We have launched the pilot scheme on sports dispute resolution to advance Hong Kong's development as an international center for sports dispute resolution. Strengthening professional collaboration. The Hong Kong Professional Services Go Global platform, initiated by the DOJ, was officially launched at the end of last year to work with our professional services sectors in supporting mainland enterprises to go global with Hong Kong as their preferred platform. Regional Intellectual Property Trading Center. Hong Kong is actively fulfilling its role as a regional intellectual property trading center. We will refine the associated tax regime and institutional framework, nurture talent, leverage our strengths in professional services in order to boost economic development through driving IP trading and financing. Tax deduction arrangements. We are consulting the trade on tax deduction arrangements for capital expenditure incurred for purchasing IP or the rights to use IP. We plan to introduce an amendment bill this year. Reducing costs will facilitate more relevant trading facilities, which will be conducive to the development of knowledge-intensive industries and could reinforce Hong Kong's position as a regional IP trading center. IP Financing Sandbox. The IP Financing Sandbox was launched at the end of last year with 3 major Hong Kong banks and their customers from the biotechnology, electronics, and technology sectors, as well as legal and professional services organizations participating in the pilot project. The Commerce and Economic Development Bureau and the Intellectual Property Development will, together with the Hong Kong MA, closely monitor the operation of the sandbox and will make follow-up arrangements. Patent valuation support. The Hong Kong has earmarked $28 million to support the Hong Kong Technology and Innovation Support Center in providing I&T enterprises with patent evaluation based on Guobiao, GB, and implementing the 2-year pilot patent valuation support scheme to assist I&T enterprises for conducting valuation of their patent assets. Patent examination. The IPD will expand its team of patent examiners, particularly for original grant patent applications in major technology fields to strengthen its in-house examination capacity and provide more robust legal protection for R&D outcomes. Talent training. Together with the VTC, the IPD will roll out a 2-year pilot program and establish the Intellectual Property Academy to provide on-the-job training linked to the qualifications framework. We have earmarked $52 million for the project, which is targeted to start at the end of this year. Business matching. With a robust IP protection regime and professional expertise, Hong Kong can provide comprehensive support to mainland enterprises. Following the arrangement for mainland enterprises to participate in matching activities in Hong Kong at the end of last year, the IPD will collaborate with mainland to organize Hong Kong IP professionals to participate in mainland business matching programs in the middle of this year. International Hub for High-Caliber Talent. Hong Kong ranks first in Asia and 4th globally in the World Talent Ranking 2025. We will continue nurturing local talent, attracting talent globally, and developing an international education hub to achieve the integrated development of education, technology, and talent. Nurturing talent. I&T. Through the STEM internship scheme, we encourage university students to gain I&T-related work experience, providing nearly 20,000 internship opportunities so far. The Research Talent Hub has approved over 15,000 applications, providing subsidies for institutions to engage STEM university graduates to undertake R&D work. Finance. The Hong Kong Academy of Finance is committed to nurturing financial leaders with global vision. Its Financial Leaders Program has attracted over 80 senior executives, benefiting nearly 50 institutions. The GBA Fintech two-way internship scheme for post-secondary students provides subsidies for students from Hong Kong and the mainland to take part in short-term internships in fintech companies. About 30 enterprises and 100 students have taken part in the scheme. To enhance the professional competency of insurance practitioners, we will extend the program to enhance talent training for the insurance sector by 3 years. Legal and dispute resolution. The Hong Kong International Legal Talent Training Academy has provided professional practical training for over 2,000 participants from various places and will continue facilitating experience sharing with legal and dispute resolution practitioners in the mainland, Belt and Road, and other jurisdictions. Aviation. We are focusing on training both serving and newly recruited aviation personnel. The Hong Kong International Aviation Academy will, in partnership with the Chinese University of Hong Kong, launch a new Master of Science in Aviation Management program this year. The Academy has also, in collaboration with an overseas aeronautic services company, set up the Aircraft Engineering Training Center to offer a range of professional training courses on aircraft maintenance, aircraft parts processing, and certification. construction industry will continue to nurture construction professionals to cater for future manpower demand. To assist more graduates in obtaining professional qualifications, we will allocate $65 million to provide additional government-funded training places this year. Attracting talent. The various talent admission schemes have attracted over 270,000 talented individuals from around the world, with the Top Talent Pass scheme drawing over 100,000 global elites, contributing to Hong Kong's economic development. The Hong Kong Talent Engage will continue to step up its efforts to attract talent from the mainland and overseas and expand its network of working partners to help incoming talents and their families to settle in Hong Kong. Inno Hong Kong has worked with more than 30 top universities and research institutions in the mainland and overseas, bringing together more than 3,000 researchers for world-class scientific research collaborations. We launched the 3 billion Frontier Technology Research Support Scheme last year to align with the country's strategic plan for frontier technology development. As a major international education hub, Hong Kong boasts 5 of the world's top 100 universities and ranks second globally in terms of education competitiveness according to the World Competitiveness Yearbook 2025 of the International Institute for Management Development, IMD. Third Medical School. The government has earmarked resources to support, on a matching basis, the Hong Kong University of Science and Technology, Hong Kong UST, in developing the Third Medical School, which aims to admit its first cohort of students in the 2028-29 academic year. The new medical school will focus on nurturing talent with both clinical and R&D capabilities and attracting more medical talent to take up teaching and research positions. The government has reserved land at Ngau Tam Mei in the Annam for the permanent campus of the new medical school and for the development of an integrated teaching and research hospital. Resources will be earmarked accordingly. The government will further explore with Hong Kong UST the development and operations to commencement of the project as soon as possible. NM University Town. For the development of the NM University Town, we will roll out 3 sites in Hong Shui Kiu for application by UGC-funded universities and universities of applied sciences for campus development. We will earmark $10 billion for providing loans to support campus development. Establishing the Study and Hong Kong brand. The Education Bureau, EDB, has set up the task force on studying in Hong Kong to attract top-notch students globally. The Study in Hong Kong Week, currently underway, features key events including the Asia-Pacific Association for International Education Conference and Exhibition, which is one of the world's top 3 international higher education conferences, and the International Symposium hosted by the Alliance of Universities of Applied Sciences.
Integrated development of culture, sports and tourism. We will continue promoting the integrated development of culture, sports and tourism to provide better urban living experience for residents and visitors. Tourism industry. Last year saw an increase of 12% in visitor arrivals, creating business and job opportunities for related sectors. In the coming year, we will allocate $1,660 million to the Hong Kong Tourism Board. Highlight Hong Kong's uniqueness to enhance tourism appeal. Hong Kong is the events capital of Asia. The Hong Kong TV will scale up its flagship events and promotion, introducing new elements and extending events duration, and organize more signature festive events to highlight Hong Kong's East meets West uniqueness. Building on the success of last year's immersive light show in Central, featuring spectacular 3D light shows, the Hong Kong Tourism Board will launch a brand new show with the theme of lights festivals across various locations at different times of the year to replace a symphony of lights. Attract high-end overnight visitors. The Tourism Board will draw more overnight visitors by stepping up marketing efforts in source markets with potential, including mainland cities outside Guangdong, as well as emerging markets such as ASEAN and the Middle East. We will also proactively promote the hosting of a wider range of conferences, exhibitions, and incentive travel events in Hong Kong. The number of ship calls to Hong Kong reached 189 last year, representing a year-on-year increase of 26%. The Tourism Board will further attract more international cruises to include Hong Kong in their itineraries. We will continue strengthening cooperation with the GPA and other mainland provinces and municipalities, and exploring with airlines to offer multi-destination flight itineraries so as to attract more overseas visitors to Hong Kong and the mainland. Revitalize historic buildings. Historic buildings embody the city culture of Hong Kong. We have implemented 24 revitalization projects, with 4 having won international awards. We have also provided subsidies for maintenance works of more than 80 private historic buildings. We will earmark an additional funding of $1 billion for the Built Heritage Conservation Fund to continue taking forward the relevant work. Enhance the harbourfront. Following the opening of the eastern section of the East Coast Boardwalk in North Point at the end of last year, the approximately 13-kilometer-long harbourfront from Kennedy Town to Shao Ki Wan has now been fully connected. Adhering to the incremental approach in enhancing the harbourfront, we plan to conduct a consultation on the construction of a pedestrian walkway at the Praia of Kennedy Town in the second quarter of this year. After the phased opening of a waterfront site near Hong Kong Station this quarter, the harbourfront promenades in Kowloon will be extended to about 15 kilometers. Foster urban-rural integration. To support tourism is everywhere and promote urban-rural integration, we propose allocating $200 million for launching the NM Urban-Rural Integration Fund as a pilot scheme. The scheme aims to encourage non-governmental organizations and relevant bodies to take forward rural tourism projects and bring economic vitality to rural villages. Sports industry. Hong Kong athletes have achieved outstanding results on the international stage. Last year, our athletes achieved historic results in the national games, winning 9 gold, 2 silver, and 8 bronze medals. We will allocate more resources to proactively promote sports in the community, support elite sports, maintain Hong Kong as a center for major international sports events, enhance professionalism in sports, and develop sports as an industry. We will inject $1.2 billion into the sports section of the Arts and Sports Development Fund to further promote sports development, including strengthening training for team sports athletes, improving the professional standards of coaches, as well as supporting and exploring more diverse and higher-level sports competitions to be held in Hong Kong. We will continue promoting Hong Kong as a center for major international sports events and developing sports as an industry through the M-Mark system. We will continue working with Kai Tak Sports Park Limited to proactively attract more major international sports events and activities. Cultural and creative industries. We are committed to promoting the development of arts, culture, and creative industries. A total of over $9 billion has been injected into the Create Smart initiative and the Film Development Fund. Premium Arts Trading Hub. We are proactively developing Hong Kong into a global trading hub for premium arts and will shortly finalize the details of a collaboration with Art Basel for the coming 5 years. To strengthen Hong Kong's position as one of the world's top 3 arts trading centers, we have initiated a study focusing on exploring areas such as financing and talent development. The study is expected to be completed within this year. Accelerating green development. To proactively align with the national geocarbon targets and green and low-carbon development strategies, we will strive to promote the development of green industries and green transformation of enterprises. Green industries and green transformation require the support of capital, technology, and talents, thereby bringing enormous business opportunities to Hong Kong. Achieving the geocarbon targets. We are actively implementing the Hong Kong's Climate Action Plan 2050 as we strive to reduce our carbon emissions by half from the 2005 levels before 2035 and achieve carbon neutrality before year 2050. Green technology. Since the establishment of the Green Tech Fund, the government has injected a total of $400 million into the fund and approved a number of projects, including production and storage of hydrogen fuel and the technology of turning waste into resources. In particular, a university research team has promoted its newly developed industrial wastewater treatment technology to the GBA and the Yangtze River Delta region, while another is planning to promote a new fuel cell stack technology in collaboration with a hydrogen fuel cell enterprise. Hydrogen development. Pursuant to the strategy of hydrogen development in Hong Kong, we will formulate hydrogen standard certification. We are consulting the trade on the framework. We will view the establishing a certification system that connects with both the mainland and the world, building Hong Kong into a demonstration platform for the export of green and low-carbon hydrogen technologies and products. We will host the Hydrogen Week in May to foster international exchanges and organize visits to the mainland on the development of hydrogen applications for overseas experts. Green finance. To consolidate and enhance Hong Kong's status as an international green finance center, the government will continue issuing sustainable bonds, establishing an enabling regulatory environment, and strengthening cross-sectoral collaboration, including taking forward the implementation of the Hong Kong Sustainability Disclosure Standards. The Accounting and Financial Reporting Council is consulting the public on the proposed regulatory framework for assurance. The HKMA has been refining the Hong Kong taxonomy for sustainable finance to more effectively address the financing needs of relevant projects, thereby expediting low-carbon transition in the region. It will also strive to develop green transition planning guidance for banks within this year. We will support the exploration with the mainland and international multilateral financial institutions of the establishments of a Hong Kong-based Green Technology Projects Accelerator. The accelerator will provide incubation, acceleration, and empowerment services for green technology projects in Belt and Road regions and serve as an innovative demonstration of Hong Kong's green finance-related services. We will explore facilitating financial institutions to obtain public utility usage data of enterprises with their consent to enhance the efficiency of green financing and risk assessment. Green City, iPark. iPark 1, Hong Kong's first waste-to-energy facility for treating municipal solid waste, has gradually commenced operation since the end of last year. Upon full operation, the facility can process 3,000 tons of municipal solid waste per day and exports over 400 million kilowatt-hours of electricity to the power grid per year, sufficient to power 100,000 households. With the planned iPark 2, Hong Kong is progressing steadily towards the target of zero landfill and carbon neutrality. Waste reduction and recycling. Starting from the next financial year, the government will earmark resources for launching a 5-year plan to enhance and upgrade recycling infrastructure in 3 areas. First, expanding the recycling network by gradually transforming Green at Community into round-the-clock self-service recycling facilities. Second, extracting valuable materials from waste and turning them into raw materials for making green products through the use of technology. And third, building a smart recycling network logistics system to enhance its cost effectiveness and efficiency. Electric vehicles, or EV. We will continue promoting the use of EVs. The first registration tax, or FRT, for electric commercial vehicles, electric motorcycles, and electric motor tricycles will continue to be waived in full until the end of March 2028. Given the maturity of technology, ample supply, more choices of vehicle models, and reduced prices, the current FRT concession arrangements for electric private cars will not be extended beyond its expiry at the end of March this year. The Environment and Ecology Bureau will announce the details in due course. Sustainable development of agriculture and fisheries industries. We are sustaining our efforts in taking forward the blueprint for the sustainable development of agriculture and fisheries. For the fisheries sector, the modernized marine fish culture farms at Wong Chuk Kok Hoi and Myers Bay new fish culture zones have commenced operation. R&D of fish fry and development of processing facilities for local fisheries products will continue to be supported by the Sustainable Fisheries Development Fund. For agriculture, we will select an operator in the first half of this year to construct and operate the first multi-story, environmentally friendly pig farm in Lo Wu. Land and housing supply. Northern Metropolis. The Northern Metropolis plays a pivotal role in driving Hong Kong's social and economic development and enhancing our competitiveness. The government is pressing ahead with the development of the NM, which would provide ample room for the development of housing, I&T sector, as well as other industries. Land development and infrastructure. The first batch of site formation works for the I&T land in Santi Tenopole and university land in Hung Shui Kiu will be completed within this year. We will seek funding approval from the LegCo in year 2026-7 for kick-starting projects such as the site formation and engineering infrastructure works for Ngau Ta Mei NDA and Stage 2 of Santi Tenopole Phase 1 development, as well as construction of the government's joint user complex in Kutong North. The Hung Shui Kiu Industry Park Company Limited was established last month. It will develop and operate around 23-hectare industry land in Hung Shui Kiu through direct participation and public-private partnership with a view to bringing in more industries in an accelerated manner. We plan to seek funding approval from the LegCo for injecting an initial capital of $10 billion to support its initial operation and development needs, thereby facilitating its operation to commence by the middle of this year. Multi-pronged development approach. We are accelerating the development of the NM with an innovative mindset. For instance, the large-scale land disposal approach is adopted to expedite the granting of land in NDAs, and tenders are being invited for the first pilot area in Hongshui-Q Hachun. We have also introduced flexible payment arrangements, such as allowing the offsetting of land premium by surrendering land in the NM to be resumed by the government, as well as staged payments of land premium. Together with measures such as adoption of the pay-for-what-you-build approach for assessing premium based on the actual gross floor area and the intended use, and provision of longer-term government tenancies, these arrangements can alleviate the cash flow pressure on enterprises and the uncertainties they face when pursuing land development. We will continue making appropriate land disposal and financing arrangements for the industry-sized and major development projects in the NM, and stepping up efforts to attract enterprises and investments with a view to encouraging high-quality enterprises to establish in the NM. Dedicated legislation along with administrative measures. We will shortly conduct public consultation on the proposal to introduce a dedicated legislation to accelerate the development of the NM. Our aim is to introduce the bill in the middle of this year. In addition, the NM Project Supervision Office will expedite large-scale private development projects in the NM by strengthening coordination and imposing time limits on the approval process. These administrative arrangements are also applicable to development projects outside of the NM. Land supply. We will make available land for the production of about 98,000 private housing units in the next 5 years. The land sale program for the coming year will include 9 residential sites. Together with railway property development projects undertaken by the Urban Renewal Authority, as well as private development and redevelopment initiatives, the potential land supply for the whole year is expected to have a capacity for providing around some 22,000 units. I would like to emphasize that for the steady development of the market, the specific land sale arrangements will be announced on a quarterly basis after careful consideration of market conditions and other relevant circumstances. In view of the vacancy rates in the non-residential property market, the supply and demand, the government will not put up general commercial sites for sale in the coming year. In addition, the Hong Kong IC will collaborate with regional and international long-term capital to channel funds into high-quality commercial property projects that align with Hong Kong's industrial positioning and match them with enterprises from target industries. Separately, the Development Bureau is inviting the market to submit expressions of interest for post-secondary student hostel development on 3 sites. Subject to market response, the relevant sites may be put up for tender. Housing supply. Taking into account light public housing, the total public housing production in Hong Kong will be around 196,000 units in the coming 5 years, an increase of more than 80% compared to the 5-year period since the current term government took office. Around 9,500 light public housing units were built and commissioned last year. We are steadily moving towards the target of completing around 30,000 LPH units by 2027 to 8. The basic housing unit regulatory regime will come into effect in March with a 48-month transitional arrangement. On private housing supply, we estimate that the completion of private residential units will average at around 17,000 units annually over a 5-year period from this year, representing a decrease of about 8% over the annual average of the past 5 years. The potential supply of first-hand private residential units for the next 3 to 4 years will be around 104,000 units.
Infrastructure development, transport infrastructure. The government has recently announced a transport strategy blueprint outlining strategies and specific recommendations for the sustainable development of the transport system in Hong Kong. Guided by a public transport-oriented principle, the blueprint aims to enhance cross-boundary transport infrastructure, facilitate the movement of people and goods within the GBA, and drive smart transformation to provide greater convenience for the public and tourists. We are pressing ahead with a series of railway, major road, and smart and green mass transit system projects to form an 8 vertical and 8 horizontal layout. Among them, the central Kowloon bypass Yamate section is now open to traffic, while the remaining Kowloon Bay section is expected to be completed by the end of this year. By then, it will only take about 12 minutes to travel between Yamate and Changkwano. As for railways, projects including Kutong Station, Tongchong Line Extension, Hongshui-Q Station, Tumun South Extension, and Oyster Bay Station, and so on, will be completed progressively from next year onwards. We are taking forward the Northern Link, Main Line, and Spur Line at full steam for commissioning simultaneously by 2034 or earlier. We are also actively taking forward the Hong Kong-Shenzhen Western Rail Link Hongshui-Q Tianhai project, with a target of inviting tender for its detailed design and construction next year and commissioning in 2035. Besides, tender for the Smart and Green Mass Transit System project in Hongshui-Q Hachun NDA is expected to be invited this year. We are also pressing ahead with the investigation study for the NM Highway with priority given to the Santin section. The target is to invite tenders for the main construction works next year, aiming for commissioning by 2036 or earlier. Professional development of construction industry, application of robots. We have required public works projects to adopt construction robots in suitable processes. To this end, the Construction Industry Council will also provide relevant training to promote the effective use of robots in the industry. Promoting application of INT. The Construction Innovation and Technology Fund serves to promote the industry-wide application of INT, thereby enhancing productivity and site safety as well as reducing construction costs. We will inject $1 billion into the fund to continue supporting industry development. New engineering contract form and smart site and safety system. We are actively exploring with the Tianhai Authority for the pilot implementation of Hong Kong's new engineering contract form and smart site safety system in Tianhai to facilitate the alignment of the mainland's engineering contract and management system with Hong Kong and international standards. Aligning construction standards. We will make reference to Guobiao and overseas standards to further enhance local construction standards and specifications. Besides, we will leverage Hong Kong's unique strength as a global city and experience to co-establish the GBA construction standards and help Guobiao gain access to the global market. Building Technology Research Institute. To promote applied R&D and strengthen control over construction costs, we have earmarked $100 million for commissioning the Building Technology Research Institute to conduct various studies. These include reviewing construction standards and exploring AI applications. Reducing construction costs. Through enhancing the project procurement model and streamlining the approval process, the Development Bureau is implementing various measures to reduce construction costs and enhance effectiveness. For example, cost savings of about 10% to 20% can be achieved through direct procurement of modular integrated construction, that is MIC, modules in lead public housing projects as well as electrical and mechanical equipment for a sewer treatment plant project. Using a self-developed building information modeling, that is BEAM-enabled systematic approach to foundation design, the Housing Department achieves construction cost saving of about $1 million per building on average. In addition, the second-generation MIC approach, together with locally developed innovative coupling technology, are being adopted to expedite public housing projects and enhance cost-effectiveness. A caring and inclusive community, supporting work in the aftermath of Tai Po fire. The government has provided comprehensive support for those affected by the Tai Po fire. We have just announced the long-term housing arrangements and earmarked $4 billion accordingly. To reduce the risks of bid rigging in building repair works, the URA will launch an enhanced version of Smart Tender in the second half of this year. In addition to providing a more rigorous pre-qualified list, the URA will render professional advice and support for owners and engaging consultants and contractors. Besides, the URA will provide subsidies to encourage owners to utilize the paid services of Smart Tender. For these two measures, we propose allocating a total of $300 million to the URA. The Development Bureau is conducting a comprehensive review of the Operation Building Bright 2.0 to draw up a new subsidy scheme. We will earmark $3 billion accordingly. Moreover, we will allocate $1 billion to extend the lift modernization subsidy scheme to provide subsidies to property owners. caring for the elderly. From the next financial year onwards, the government will increase the number of community care service vouchers for the elderly by 4,000 to 16,000, and the number of residential care service vouchers for the elderly by 1,000 to 7,000, involving an estimated full-year expenditure of $1.2 billion and $1.97 billion respectively. The government will also promote the further development of the elderly care services market while promoting the parallel development of publicly funded and market-based services, thereby enhancing the overall service capacity. The government has been supporting cross-boundary elderly care. Starting this month, the residential care services scheme in Guangdong has included 2 more residential care homes for the elderly, resulting in a total of 26 RCHEs covering all 9 cities of the GBA. The 2-year pilot medical subsidy arrangement was also launched at the end of last year. The subsidy is subject to an annual ceiling of RMB 10,000 yuan per person and outpatient expenses and RMB 30,000 yuan per person for inpatient expenses. In addition, the government will implement new arrangements for portable cash assistance in the middle of this year, under which elderly participants of the Guangdong Scheme, Fujian Scheme, and Portable Comprehensive Social Security Assistance Scheme may opt to receive government assistance directly through their accounts with designated mainland banks. Last year, the Working Group on Promoting Silver Economy announced 30 measures, most of which have achieved positive outcomes. The government will continue working closely with the industry to promote the silver economy. Support for youth will provide young people with more exchange and internship opportunities in the mainland and overseas, including introducing a new media thematic internship program in the mainland and allocating an additional $60 million for implementing the HYAB funding scheme for international youth exchange continuously. We will provide around 3,600 short-term internship placements in government departments and public bodies for post-secondary students, enabling young people aspiring for a public service career to gain experience. Women's development. To promote all-round women's development, the annual funding for the Women Empowerment Fund will be increased to $30 million starting from the next financial year. Support for working families. To strengthen the support for working families, the total number of service places of aided standalone childcare centers has exceeded 1,530, with an increase of about 12% over last year. Support for persons with disabilities. The government will enhance rehabilitation services by providing about 450 additional places for day, residential, and preschool services in the next financial year, involving an additional annual expenditure of about $107 million. For school children receiving on-site preschool rehabilitation services, the government will provide bridging and support services during their first term in primary school. This measure will involve an additional annual expenditure of about $260 million. Promoting employment. The Re-employment Allowance pilot scheme has been well received. Since its launch 1.5 years ago, over 37,000 placements have been made. The provision for the scheme will be increased to $222 million in the coming financial year. The employment program for the elderly and the middle-aged aims to encourage employers to hire persons aged 40 or above and provide them with on-the-job training. Employers will, for employing each eligible person, receive a maximum on-the-job training allowance of $5,000 per month for 3 months to 12 months. The program subsidized nearly 4,500 placements last year. Besides, the ERB has launched 2 new courses dedicated for persons aged 50 or above. And enhancing healthcare services. Advancing primary healthcare development. The government will deepen development of primary healthcare in the community by launching the Primary Healthcare Co-care Network, which will extend screening to include hepatitis B and other diseases, strengthen cross-disciplinary collaboration, and improve support services such as medical laboratory testing and diagnostic radiology. The target participation for the first 5 years is around 700,000 persons. The government will also implement the community drug formulary and launch the community pharmacy program in the second half of this year, bringing more convenience to the public. The Elderly Healthcare Voucher Pilot Reward Scheme will be extended by 2 years until end 2028. Elderly persons who have accumulated voucher spending of $1,000 or above within the same year on specific primary healthcare services such as examination and chronic disease management will have a 500 voucher reward. The measure will involve an additional expenditure of about $1 billion. Delivering public health care services. The 16 projects under the first hospital development plan will be completed progressively, taking into account the latest demographic structure and distribution. We are reviewing the scale and priority of projects under the second hospital development plan. We will announce in due course the relevant details and take forward the projects in an orderly manner. Enhancing private healthcare services. To enhance the price transparency of private healthcare services, such that members of the public can gain a more comprehensive understanding of price information before making medical decisions, the government will introduce the relevant regulation to the legislature this year.
Public finance. During the pandemic, several rounds of large-scale counter-cyclical measures were launched to support enterprises and safeguard jobs. These measures, though successful in stabilizing the economy and protecting people's livelihood, have led to fiscal deficits in the past few years. The budget last year introduced a reinforced fiscal consolidation program, aiming at achieving fiscal balance through strictly containing the growth of government's expenditure, suitably increasing revenue and consolidating the government's financial resources. In addition, the scale of bond issuance would be enlarged. Last year, we set the target of attaining surpluses in the operating accounts from year 2026 to 7 onwards, and the consolidated accounts in year 2028 to 9 respectively. Over the past year, we have been fully committed to implementing the fiscal consolidation program. As a result of the robust stock market and an accelerated economic growth, revenue from stamp duties and profits tax has increased by nearly $50 billion in total compared to the original estimates. In year 2025-6, the operating accounts will return to a surplus ahead of schedule, while the consolidated accounts will be broadly balanced after taking into account the net proceeds from bond issuance. In the medium term, the operating accounts will register a surplus throughout the period from year 2026-7 to 2030-31. The capital accounts will nevertheless still record a deficit annually, mainly due to a high level of capital works expenditure. As infrastructure projects are an investment in Hong Kong's future, we will meet the financing needs by suitably increasing bond issuance. During the period, fiscal reserves are expected to gradually increase to over $700 billion. Overall, our public finances have seen significant improvement. The government has been upholding the principle of keeping the expenditure within the limits of revenues as enshrined under Article 107 of the Basic Law. We are striving to achieve fiscal balance in the economic cycle and ensure the resilience and sustainability of public finances. Following through the fiscal consolidation program, we will continue implementing the reinforced fiscal consolidation program put forward in last year's budget. Key principles are as follows. 1. To focus on strictly controlling government expenditure, supplemented by increasing revenue. 2. To maintain the competitiveness of Hong Kong's simple and low tax regime, and to avoid raising tax rates substantially or introducing new taxes. And 3. To uphold the user pays and the affordable users pay principles as far as practicable in increasing revenue. Strictly containing the growth of operating expenditure. We will continue strictly containing the growth of the government's operating expenditure. Bureaus and departments will make sustained efforts to review their resource allocation and work priorities and provide public services with better cost effectiveness through consolidating internal resources, streamlining procedures, and leveraging technology. We will take forward the productivity enhancements program as planned. On the premise that comprehensive social security assistance, or CSSA, social security allowance, and statutory expenditures will not be affected, the government's recurrent expenditure will be cut by 2% in both year 2026-7 and 2027-8, delivering further savings of about $7.8 billion and $15.6 billion, respectively, over year 2025-6. The civil service establishment will be reduced by 2% in each of the coming 2 financial years to an estimated level of about 188,000 posts by the 1st of April 2026, resulting in a cumulative deletion of over 10,000 posts within this term of government. Regarding the 2026-7 civil service pay adjustment, the government will conduct the pay trend survey in accordance with the established mechanism. The Chief Executive in Council will then make a decision having due regard to the 6 factors. Increasing revenue. On increasing revenue, we will uphold the affordable users pay principle in implementing the following measures. 1. The raise of stamp duty on residential property transactions valued above $100 million will be raised from 4.25% to 6.5%, affecting about 0.3% of residential property transactions. It is estimated that revenue will increase by about $1 billion per annum. This measure will take retrospective effect from tomorrow upon passage of the amendments bill by the Legislature. And 2. Last year, we amended the Inland Revenue Ordinance to implement OECD's package by imposing the global minimum tax and implementing the Hong Kong minimum top-up tax on large multinational enterprise groups with an annual consolidated revenue of or about 750 million euros. This measure is expected to bring in an additional tax revenue of about $15 billion for the government annually, starting from year 2027 to 8. Consolidating and optimizing the use of government's financial resources. Consolidating funds established outside the government's accounts. As announced in last year's budget, we have brought back $61.5 billion from 6 seed capital funds with a relatively large unspent balance to the government's accounts for optimizing the use of government's financial resources. I have also instructed various policy bureaus to conduct a full review of the remaining 36 purpose-specific funds established outside the government's accounts. After carefully assessing the individual circumstances of the funds, we propose 1. Revising the financial arrangements of 4 funds to bring back their unspent balances on the premise of supporting their operations in the next 5 years. 2. Closing a fund which has accomplished its policy objectives and 2 funds for which objectives can be met more effectively under the established funding mechanism and bringing back their unspent balances. 3. Consolidating 6 funds into 3 for enhanced efficiency in the use of resources. And 4. Maintaining the financial arrangements of the remaining 23 funds. The above measures are expected to bring back about $15.8 billion to the government's accounts in year 2026-7. Transferring the accumulated surplus of the bond fund. The bond fund, established in year 2009 outside the consolidated account, aims to support the issuance of bonds, including silver bonds, I-bonds, and alternative bonds under the government's bond program. Since 2024, silver bonds have been issued under the infrastructure bond program instead, with the proceeds being credited to the Capital Works Reserve Fund. The majority of bonds issued under the government's bond program will be held to maturity for redemption by the end of this year. By the end of March, the balance of the bond fund is estimated to be about $150 billion, with an accumulated surplus of about $37 billion after deducting outstanding bond balances and interest payments, etc. To optimize the use of the surplus of the bond fund, the government will introduce a resolution to the Legislature to enable the transfer of the accumulated fund surplus to the consolidated account in year 2026-7. Transferring investment income of the exchange fund. The exchange fund achieved record-breaking performance last year, delivering an investment income of $330 billion. As at the end of last year, the total value of assets under the exchange fund exceeded $4.1 trillion, which would suffice to maintain monetary and financial stability in Hong Kong. on the premise that the exchange funds function to maintain the stability and integrity of the local monetary and financial systems will not be compromised, I propose, under the Exchange Fund Ordinance, transferring $75 billion in each of the coming 2 financial years, totaling $150 billion from the Exchange Fund to the Capital Works Reserve Fund in support of the Northern Metropolis and other infrastructure projects. Bond issuance. Last year's policy address announced that the government would earmark an additional $30 billion in the next 2 to 3 years to increase expenditure on works projects for driving sustained economic development. The government's capital works expenditure is estimated to be about $128 billion for year 2026-7. Capital works expenditure will remain at a similar level during the medium-range forecast period. The government has since 2019 and 2024 issued green bonds and infrastructure bonds respectively. Issuing bonds allows the government to invest in infrastructure while diversifying the development of the local bond market. As the government will accelerate the development of the Northern Metropolis and other public works projects relating to the economy and people's livelihood, we plan to raise the total borrowing ceiling of the 2 bond programs from $700 billion announced last year to $900 billion. About $160 billion to $220 billion worth of bonds will be issued in each of the next 5 years, about half of which will be used for refinancing the short-term debts incurred in recent years. In future, we will issue more longer-term bonds to align more closely the cash flow duration with project requirements. During the medium-range forecast period, the ratio of government's debt to GDP will rise from 14.4% to 19.9%, which is a highly prudent level and well below that of most advanced economies. I would like to reiterate that proceeds from bond issuance will be used to invest in infrastructure only, but not for government's recurrent expenditure.
Revised estimate for 2025-26. The 2025-26 revised estimate of total government revenue is about $688.8 billion, higher than the original estimate by 4.5%. Due to a buoyant equity market and an accelerated economic growth, the revenue estimate from stamp duties is revised to $99.5 billion, an increase of about $31.9 billion from the original estimate. Revenue from profits tax has gone up by about $16.8 billion, while that from salaries tax remains stable, with the revised estimates at $290 billion and $97 billion respectively, demonstrating the strong resilience of our economy. However, as the residential property market has just stabilized while the commercial property market remains relatively sluggish, government revenue from land premiums stays low, with the revised estimate at $17.5 billion, lower than the original estimate by $3.5 billion. The revised estimate of total government expenditure for 2025-26 is $789.2 billion, lower than the original estimate by $33.1 billion. Of this, recurrent expenditure is $572.4 billion, lower than the original estimate by $15.7 billion. The operating account for 2025-26, which was originally estimated to record a deficit of about $3 billion, will register a surplus of $51.3 billion. The capital account will record a deficit due to low revenue from land premium, coupled with high capital works expenditure to cater for the accelerated development of the NM and other public works projects relating to the economy and people's lives. Taking into account the issuance of government bonds of $155 billion and repayments of $51.7 billion, The consolidated account is expected to register a surplus of $2.9 billion instead of a deficit of about $67 billion as originally estimated. Fiscal reserves are expected to be $657.2 billion by the 31st of March 2026. Estimate for 2026 to 27. The major policy initiatives announced in last year's policy address involve $7.4 billion in operating expenditure, $32 billion in capital expenditure, and $20 billion in financial commitments. Besides, there will be about $1.3 billion in revenue foregone. The financial implications of such initiatives have been reflected in the estimates for 2026 to 27. Total government expenditure for 2026 to 27 will increase by about 6.9% to $843.4 billion, with its ratio to nominal GDP projected to be 24.2%. Recurrent expenditure for 2026 to 27 will increase by 4.8% to $599.7 billion. Of this, substantial resources will continue to be allocated to livelihood-related policy areas, including healthcare, social welfare, and education, involving a total of $357.1 billion and representing about 60% of recurrent expenditure. Non-recurrent expenditure will increase by 36.9% to $40.5 billion. Total government revenue for 2026 to 27 is estimated to be $765.2 billion, while earnings and profits tax are estimated to be $321.2 billion, increasing by $2.2 billion over the revised estimate for 2025 to 26. On the basis of the land sale program and the land supply target for 2026 to 27, revenue from land premium is estimated to be $18 billion, increasing by $0.5 billion over the revised estimate for 2025 to 26. Revenue from stamp duties is estimated to be about $101 billion, increasing by 1.5% over the revised estimate for 2025 to 26. Besides, we will bring back about $15.8 billion from funds established outside the government's accounts and transfer $37 billion and $75 billion respectively from the surplus of the bond fund and the investment income of the exchange fund to the government's accounts. The operating account for 2026 to 27 is estimated to register a surplus of about $11.9 billion, while the capital account is estimated to record a deficit of about $90.1 billion. Taking into account the bond issuance of about $160 billion and repayments of about $59.7 billion in 2026 to 27, a consolidated surplus of $22.1 billion is expected for the year, and the fiscal reserves will rise to $679.3 billion. Supporting people and enterprises. To relieve the economic pressure faced by the people and enterprises, we will, having regard to the government's fiscal position this year, introduce the following measures. 1. Providing rates concession for domestic properties for the first 2 quarters of 2026 to 27, subject to a ceiling of $500 for each rateable property. This measure is estimated to involve about 3.51 million domestic properties and reduce government revenue by about $3.1 billion. 2. Providing rates concessions for non-domestic properties for the first 2 quarters of 2026-27, subject to a ceiling of $500 for each rateable property. This measure is estimated to involve about 440,000 non-domestic properties and reduce government revenue by about $400 million. 3. Reducing salaries, tax, and tax under personal assessment for the year of assessment 2025-26 by 100%, subject to a ceiling of $3,000. The reduction will be reflected in the final tax payable for the year of assessment 2025-26. This measure will benefit about 2.12 million taxpayers and reduce government revenue by about $5.3 billion. 4. Reducing profits tax for the year of assessment 2025-26 by 100%, subject to a ceiling of $3,000. The reduction will be reflected in the final tax payable for the year of assessment 2025-26. This measure would benefit about 171,000 businesses and reduce government revenue by about $500 million. And 5. Providing an allowance for eligible Social Security recipients equal to 1 month of the standard rate CSSA payments, old age allowance, old age living allowance, or disability allowance, while similar arrangements will also apply to recipients of the working family allowance, altogether involving an additional expenditure of about $6.5 billion. Besides, starting from the year of assessment 2026-27, I propose the following. 1. Increasing the basic allowance and single-parent allowance from $132,000 to $145,000 and the married person's allowance from $264,000 to $290,000. This measure would benefit about 2.09 million taxpayers and reduce tax revenue by about $3.56 billion a year. 2. Increasing the child allowance and additional child allowance from $130,000 to $140,000. This measure would benefit about 360,000 taxpayers and reduce tax revenue by about $680 million a year. And 3. Increasing the allowance for maintaining a dependent parent or grandparent and raising the deduction ceiling for elderly residential care expenses. These measures would benefit about 830,000 taxpayers and reduce tax revenue by about $970 million a year. I will make the following 3 adjustments. Increasing the allowance for maintaining a dependent parent or grandparent aged 60 or above from $50,000 to $55,000. The same increase applies to the additional allowance for taxpayers residing with these parents or grandparents. Increasing the allowance for maintaining a dependent parent or grandparent aged 55 to 59 from $25,000 to $27,500. The same increase applies to the additional allowance for taxpayers residing with these parents or grandparents. And raising the deduction ceiling for elderly residential care expenses from $100,000 to $110,000 for taxpayers whose parents or grandparents are admitted to eligible residential care homes. Medium Range Forecast, or MRF for short. The MRF projects the revenue and expenditure as well as the fiscal position of the government from a macro perspective. It has fully reflected the impact of these measures in the fiscal consolidation program from 2026-27 to 2030-31. A real economic growth rate of 3% is adopted. During the above period, the average annual capital works expenditure will be about $120 billion, while recurrent government expenditure will grow at a rate of 3.6% per annum. The ratio of total government expenditure to GDP will gradually fall from about 24.2% for 2026-27 to about 21.5% for 2030-31. As regards revenue, the growth rates of revenue from profits tax, salaries tax, and stamp duties are expected to correspond to the economic growth rates in the next few years. For 2027-28 onwards, revenue from land premium is estimated to progressively rise to 2% of GDP, which is a conservative level lower than the average of 3.2% over the past 20 years. Overall, the ratio of government revenue to GDP will remain at about 20%. In addition, the MRF reflects the proceeds from the annual issuance of government sustainable bonds and infrastructure bonds worth about $160 billion to $220 billion in total. After deducting bond repayments, the net proceeds from bond issuance each year range from $57 billion to $117 billion. Based on the above projections, there will be a surplus in the operating account for each of the next 5 years. While the capital account will still record a deficit due to expenditure on infrastructure. After taking into account net proceeds from the issuance of bonds, the consolidated account will still register a surplus in each of the next 5 years. The above forecast has not taken into account any tax concessions or relief measures that the government may implement after 2027-28. Fiscal reserves are estimated at $733.7 billion by the end of March 2031, representing 17.3% of GDP, or equivalent to about 10 months of government expenditure. President, members, over the past year, the global environment has remained volatile. Hong Kong has continued to undergo economic transformation, with some sectors still facing pressure. Technological innovation, in particular the development of AI, has brought a mix of opportunities and challenges. Yet, Hong Kong has always thrived amid changes and progressed through innovation, demonstrating strong determination and resilience, as well as exceptional agility and adaptability. While transformation is ongoing, our economy has recalibrated its course and is advancing steadily. Characterized by its cultural blend of East and West, the robust rule of law, a simple and low-tax regime, as well as a safe and livable environment, Hong Kong is well placed to attract talent, enterprises, and capital. We must make full use of our strengths and leverage the resolute support of our country to speed up and scale up our economic development sustainably for creating better development opportunities for the people and enhancing their quality of life. The color of the cover of this year's budget is purple, representing elegance and charm. The color also stands for calmness and perseverance, signifying the growing intrinsic strength of Hong Kong's economy in the midst of a fast-changing external environment, as well as people's aspirations for happiness. Next year marks the 30th anniversary of Hong Kong's return to the motherland. Let us gallop towards a brighter future with confidence and determination. By making the most of our strength under the one country, two systems principle, we will certainly enrich and enliven our city through more diverse and inclusive development for the better lives of our citizens, and to make greater contributions towards Chinese modernization. Thank you.
I now propose the question to you that the aforesaid bill be read the second time. In accordance with the rules of procedure, the second reading debate is adjourned, and the estimates are referred to the Finance Committee for examination before the debate on the bill resumes. Proposed resolutions to extend the period for amending subsidiary legislation. Proposed resolution under the Interpretation and General Clauses Ordinance to extend the period for amending 5 pieces of subsidiary legislation relating to the implementation of the EMPF platform, which were laid on the table of this Council on the 28th of January 2026. I now call upon Mr. Bill Tang to move the motion. President, I move that the motion as printed on the agenda be passed. I propose the question to you that Mr. Bill Tang's motion be passed. I now put the question to you as stated. Voting begins. Members will please press the present button. Will those in favor please raise their hands? Those against, please raise their hands. I think the question is agreed by the majority of each of the 2 groups of members present, that is, members returned by the Election Committee and those returned by functional constituencies and by geographical constituencies. I declare the motion passed. I now adjourn the Council until 11 a.m. on Wednesday, the 18th of March 2026.